Good afternoon, it's Quant Trade Edge, and I wanted to post this video before the market reopened to show you what we did on Friday, which was pretty much catch the low and ride it back up for quite a bit on ES and NQ, particularly ES though. And I don't say that to brag or to whatever, I say that to just let you know how predictable and repeatable this can be done. And I wanted to just show you how we did it, and I can show you the Discord and how we were posting things in real time to watch, to show you the mindset of how to even watch for it. So this is the NASDAQ, and before the day started, trading starts well before the market opens. It starts with your homework the previous day. And the homework for me the previous day said we have a trend line coming in here, and we want to be a buyer once a bottom is confirmed after we tag the trend line. It's that simple, right? We have these 2 points. This is the September 2nd low. This is the October 10th low. We have 2 points that make a nice line, and my thesis is that the first time we touch this, we're going to bounce. Even if we end up breaking it later, if there's a bear market, whatever, I don't know what's going to happen longer term, but I know that today on this first test, or today would Friday on this first test, we should get a bounce. So that's how it starts. And then on the NASDAQ, I was watching the 2-minute, and I can take this ellipse out, but this blue line is basically the daily trend line and where it would show up. So here we broke the trend line and we went back up. And my thought is, this is your eager beavers getting in, so they need to get flushed. And then here they got flushed and we went up. So at that point I'm questioning, okay, is the bottom in or do we need another flush? And this is where it really helped to watch the S&P, because the S&P was lagging behind the NASDAQ in terms of hitting that trend line, and it basically needed to go down a little more, which translated to, in the NASDAQ, giving us a 2-minute ABC. This A, B, C to one final low. And then this one final low was a flat flag that broke down and rejected immediately. And that's how we knew the low was in. It was more helpful to watch this on the S&P because I have a Hoagie indicator, which all a Hoagie is multiple bars inside the range of 1 bar. And if I can find it here, let's see, what do we call it? (3BH), there we go, 3-bar Hoagie. And it basically showed us, right here, that we had a Hoagie with these bars. So as soon as that broke and this came back up, and all the Hoagie indicates to us is that the flag is flat. And we know that the final flag in a move tends to be flat. So on this 2-minute chart, we have this flat flag, break down, immediate failure, and within 2 bars, we're taking out the high. So that basically gets you in at 6665.75, 1 tick above here, with a stop below of 665525. So basically 10.5 point stop on this flat flag failure, final flag failure. And this went up, I want to say, over 100 points. So we're talking about getting in at 6665. And I mean, into the pit session, this stuff happened late in the day. Well, actually, I guess we squeezed into the close. 67.55. Okay, so maybe 90 points. Is that right? Yeah, 65 to 55. So about 90 points. But that's a 9-to-1 risk-reward ratio. And again, just so I don't sound like one of those other YouTube douchebags that trade in retrospect, I wanted to show you our Discord from the day, where were following quite a few stocks, but in terms of, there we go. This was, this blue line down here. Let me make this bigger if I can. This blue line down here was the trend line, and this was a point in time when we hadn't gotten there. And, so I was saying, we are so close to that trend line. Either way, either we rally or we rally flush, then rally. Either way, I think we're higher at the end of the day. And this was a comment at 9:07 a.m. And, and then NQ daily trend line before would look for a huge wick candle through it. What I meant was on the daily, it would look like a huge wick candle. And then somewhere here, I remember telling people not to rush, like to just be patient and wait for that. They can flush it. This is where the big boys get liquidity. Yeah, there we go. Don't be a hero ahead of that touch, right? All eyes on the NQ into the trend line. This is 9:57 a.m. Central. Long before we even got it, we're watching it. And that's the key, is to stalk the trade the whole way through. And then you're only executing once everything that you stalked plays out the way you thought it would. Like, for example, this is a 5-minute where it just went right through it. And here's a 2-minute where it's popping there. Not from extreme. Yeah, there we go. So that's a 2-minute divergence, but it was not from an extreme. So that's not, it's not something we necessarily trade. I was watching a lot of stocks. Only, let's take an aside here because this doesn't have my stock page. Crap. Okay. Or does it? No, it doesn't. Okay. Because there were a handful of leading stocks, I'll pull them up, that were up even as the market was testing its lows. Las Vegas Sands was one of them. Illumin wasn't up hugely, but it was holding within the previous day's range. Intuitive Surgical was up, blown through that previous resistance. GM was up. And the thing that these stocks have in common is they all had an earnings episodic move. GM was the only one that had a truly episodic move. The other ones are kind of like, I call them a poor man episodic, not quite 100% volume, but 60% plus with some good daily volume. Trying to think of some of the other names that were up. I can't think of them. I have about 6 or 7 stocks. DQ Energy. This was not earnings episodic, but this is just a really pretty weekly chart that's breaking out. And this was a daily. And that was another tell that the market wanted to bottom, because the leading stocks take off before the indices, because the indices have both the leading stocks and the lagging stocks. And let me put the Discord back up again. Expedia was a episodic on the day, so it also just ignored the downtrend. I mean, this is 15-minute chart from the beginning. Look at these 2 bars up. That's not what the market did. The market went down for at least 6 bars. And that's what I love about these episodic stocks. They just go up. Whether the market's up or down, they go up. So it's one less variable to throw you off. And also MicroStrategies, we caught on to the fact that this, there was a whole nother retest lower after this, and this thing just kept going. So it telegraphed the strength in Bitcoin. And with MSTR, I expect that the low that we saw on Friday holds. If not, then I think that buy is invalidated. So there we go. Right here at 11:16 a.m., here is the 2-minute flat flag on the S&P. It's a really nice, the one I showed you earlier, obviously, is the data as it stands now, which looks like it could have been done in hindsight. This was done at the time of the pattern, right here, where we caught that bottom, and we're saying ES 2 minutes was at a final flag. Oh, and then here's a thing of the stocks that were really leading here. GM. Well, I guess not all. Wayfair was another one of the big leading stocks. And And then Amazon, wasn't leading, but it looks, and again here, I'm sorry, I just showed the daily trend lines, what they look like. This is the NASDAQ. This one, okay, this is actually Bitcoin, IBIT. So anyway, and also that both of them hit the 50 SMA, which is a traditional spot where institutional money comes in. So what I was saying about Amazon there is that we had this huge gap up on earnings, and then basically we just came down to retest this previous high, 238.85, and the low of day was 238.49. So it's only natural that after this big breakout, I don't know how to draw that straight, whatever. After this, cup handle breakout, all it did was come back to retest that. And if you drop it down to a 130-minute chart, and the reason I do 130 minutes is because there's exactly 3 bars per day. If you use 120, you end up with 3 120-minute bars and then a 30-minute bar, which I think throws off the symmetry of charts. But basically on the 130-minute, there's a very clean A, B, C. And then we had such a beautifully small candle, and we got 2 times our risk just to the end of the day. I put on options to hold for the longer position, but on the intraday position, I was just doing shares on that. But anyway, getting back to the point of this, and just to wrap it up and tie it all back together again, it starts with your homework of having a thesis of what's going to happen today. And the thesis that we had, that we started the day with, I think it was 9 a.m. or so when we posted the thesis, that we have a trend line we're looking for, expect it to be higher by the end of the day, and to leave a big tail. So that thesis worked out. And then it was just painfully stalking this the whole time, all the way down here. You're like, when's it going to happen? When's it going to happen? When's it going to happen? Oh my God, is that it? Well, no, the first pioneers always have the arrows in their back. So whoever bought on here had to get flushed to a new low. Then, it becomes a question. Hey, was that enough of a flush? And it turns out that there was a clean ABC. So that was like, nope, there's another flush. And then right around here was when ES was doing a nice little test of the trend line, somewhere down here. And then it put in that failed flag pattern, which was cleaner on ES, but you can essentially see it here too. This is the push lower at 11:06, reversed by 11:12. And then it's off to the races. So what's really nice about that is this gave us a really good, actually it gave us multiple good trades, but later in the day, earlier in the day, there was a 2-minute ABC, if I remember right here. Right here, this. And once you know that the momentum has shifted, you know that you've caught it before other people have, because other people are still panicking and selling. Other people have day jobs, they're not watching every candle. And if you know that you're ahead of the crowd on this, you can really put the pedal to the metal. And this is where you make a lot of money, which is when you know that the trend has turned and you're the first one on it, you can do these patterns for size. And again, these are patterns with defined risk. So for example, on this 2-minute ABC, there's your A, there's your B. This whole move, this could technically be an AB up also, but that it doesn't matter because it didn't take out that low. And then these bars are all inside this, so this is really your ABC. And that means you take this much risk and see what you get. And that was quite a bit. This was a one-legged pullback, but even later in the day, and there was one element of psychology that I mentioned in here, and this isn't necessary, but I was just thinking, if I was a big boy with a big position, why would I go home short when the government is voting on reopening, and God knows what other news could be out there, but but the government vote for reopening was out there. So that was another thing that gave me confidence that people were not going to want to close on the lows. They were going to want to short cover before the close. So again, here we got a very clean on the 5-minute, and this is NASDAQ, A, B, C. So again, you had another opportunity to put the pedal to the metal and capture that. In fact, I believe I did it on the S&P. It's the same thing, and I think it came right into the 20 moving average also. So it was just pretty. Look how perfect that touched the 20 moving average, so that can give you more confidence in that trade. And again, the name of the game here is risk 1 unit and try to make 2, 3, 4 units. So if it doesn't work, there's no extra pain for it not working. You lose 1 unit. You always lose 1 unit when it doesn't work. So anyway, this is the type of trading that we do and the type of market structure reading that we try to teach and reinforce in our Discord. If that interests you, I'll put a link to our Discord in the description to the video, and we'd love to see you in there.